Hi, this is Roger Conrad. I'm editor of Utility Forecaster, and what I want to talk about today is the second quarter, what that means, some of the things that we've seen in the second quarter with portfolio companies, and what that might mean for our holdings as numbers come out, which will be starting in mid-July and on into August. We should have pretty much all the numbers in over a 3 to 4 week period in there. And in fact, I've published numbers of estimated earnings reporting dates in the Utility Forecaster Weekly, the most recent edition, and we'll be reviewing that listing as some of the estimated dates become harder dates as weeks go by. Meantime, we're not going to see, there's nothing coming up really until early part of, the end part of July, probably the third week. And at that point, traditionally, we've seen the first few reporters, Entergy Group from the electric. They usually give us a preliminary earnings. Chevron giving us a preliminary view, and then of course the big phone companies giving us their final tallies. And that's really where I want to come in right at this point, is where the super phone companies stand, meaning AT&T, Verizon, and then I also want to talk about the rural phone companies briefly, two of which have completed some pretty major mergers. With AT&T and Verizon, these are companies that everybody seems to want to hate. They still yield pretty close to 7%. Numbers come in very strong. Verizon completed a very big deal here in this quarter, and that was the sale of its traditional phone lines, a good chunk of their traditional phone lines, to Frontier Corporation. So this company, it's really the latest step in their transition from being a traditional phone company to being a wireless and broadband focused company. And we're going to see that reflected for the first time really in the second quarter earnings, more pronounced in the third quarter earnings. But this was a really big deal to get done, and it got done very smoothly as opposed to some of the other asset sales and spin-outs that company had done. And I don't think this is really appreciated by the market, and particularly not in the share price. People tend to look at this telephone industry as a zero-sum game. Really, ever since the tech wreck back in 2000 to 2002, that's the way this industry has been viewed, as though you can only have one winner and everybody else is a loser, and even that one winner is not going to win that much. Well, of course, this has occurred in the context of unprecedented demand growth for connectivity and smartphone growth. If I had a dollar for every article I read in 2008, 2009 predicting that smartphone use was going to fall off a cliff, people weren't going to be using these data services, the recession was going to shut all this down, and this was not like the traditional phone business, and these types of doomsday articles, I think we'd all be pretty wealthy just on that alone. But I think the way to get wealthy, though, is to buy these big telephone companies. Again, they're getting sold short basically in the market. They continue to perform. And if you look at the fact that AT&T had record iPhone sales, of course the articles that we see now and so forth concern the fact that it overwhelmed its network temporarily. But if you look at the sales of these things, I mean, that's a good problem to have. All they have to do basically is make the necessary upgrades, spend the money, which they're doing, and they've got all these a tremendous sales growth, even as Apple continues to roll out these tremendous connectivity devices, and thereby meeting tremendous demand. So nice problem to have if your only problem is meeting capacity. I think what we're going to see with these record sales that have been reporting is some pretty strong sales and cash flow numbers for AT&T. I think we're going to see the same thing for Verizon. Certainly there's no sign that any of the smartphone thing is slowing down. Penetration rates are very low. People look at this wireless industry in terms of how many cell phones can they have, and the U.S. is over-penetrated. It said, well, it's not penetrated by any standpoint in terms of smartphones. And again, this is a broadband growth is where the action is. That's where the earnings are going to come from. And these companies, both AT&T and Verizon, have now leveraged themselves much further away from the traditional phone business and towards these high growth areas. And I think we're going to see that in earnings. Again, I'm not sure when we're going to see these reflected in the share prices, but at least from the dividend perspective, those look pretty solid, regardless of what you read about in some of the blogs and so forth. But again, very, very solid situations. And I think eventually, as they continue to perform, we're going to see higher share prices. Verizon and AT&T are both less than half of where they traded in the late 1990s. AT&T at that point being SBC Communications, and really downgraded from the point of view of being a local phone company. Everybody back then, or almost every bit of commentary you read was talking about the decline of the baby bells and how AT&T, MCI, WorldCom were going to eat their lunch, and et cetera, et cetera, et cetera. And most of those competitors no longer exist, and these are the companies that dominate the market. Yet they trade at half the price levels, less than half the price levels they did at that point. That doesn't make a lot of sense to me, but again, I think that's what you look for in the market as a long-term investor, where those value anomalies are. Just want to touch briefly on the rural phone companies, and again, I'll be reporting on this in Utility Forecaster Weekly and so forth. But we've had two major deals close. Windstream, one of our portfolio picks, closed on the Iowa Telecom deal. This adds a tremendous amount of really solid franchise operations to Windstream, and further helps them tilt their business toward broadband, toward commercial enterprises and so forth. They're very big in the traditional phone business. That is a declining business. That's the reason why these things yield, these rural phones yield 9-10%. I think a profound misunderstanding. But the cash flow from that business and the lack of capital expenditures needed from that business is a tremendous source of funds, both to pay dividends and to grow the business. And they cover the dividend with free cash flow available for growth by about a 2-to-1 margin. So that means half that cash flow they're generating is being plowed back into the business and further growing cash flow and so forth. So I think I look for a lot more nice deals coming from them, and certainly a lot more very robust dividends from them. The other one is Frontier Corporation. This isn't one of our portfolio picks. It's actually one that we have in Personal Finance, Utility Forecaster's sister letter in the income portfolio there. But they closed, again, the Verizon deal. And I think people were just imputing failure all over this one for a very long time, looking at what happened with Fairpoint Communications when it absorbed some Verizon lines in the latter part of 2008, early 2009. And basically people said, well, this is going to happen to Frontier. There's no way they can absorb these lines. Verizon never gives a good spin out, so forth and so on. One thing people really didn't take in, what I never saw anybody write about except for me, was that Fairpoint, when they completed their deal with Verizon, they had to borrow at interest rates in the mid-teens. That's because the credit crunch, when they were trying to close this deal, regulators delayed it throughout 2008, so they had an opportunity. They could have closed it earlier, could have closed on financing earlier, but what happened? They did not, so they had to go to the market at the worst possible time. They were actually one of the few junk-rated companies that was able to raise funds at that time. But again, the interest rates, 14-15%, unsupportable for that business, and eventually they did declare bankruptcy. Terrible story, a great idea, but executed at the wrong time. Timing was horrible. On the other hand, the Frontier deal is 180 degrees opposite. Same great idea, great synergy between Frontier, which is already a company that's all around the country. But more importantly, they were able to borrow money at some of the best interest rates that we've seen ever for corporate America, and even for companies that weren't rated investment grade. So they were actually able to borrow all the money and then some that they needed, and the interest rate roughly half of what Fairpoint borrowed. So obviously that makes a huge difference as to what can be afforded, how you can run these types of businesses. And I think Frontier is, again, in very good shape, very undervalued. They announced when they did the deal that they would be reducing the distribution from $1 to 75 cents. No news there. It's still yielding, though, even based on that new annualized rate, yielding close to 10%. Again, tremendous opportunity throughout this phone business. I think the second quarter earnings for the rural phone companies could be impacted by these deals. Again, we're going to see some dilution there, but I look for these dividends to be very, very well covered. And again, going forward, these assets to produce progressive amounts of free cash flow, and again, create some very, very positive situations there. So that's all I have for you today. Again, keep posted with the Utility Forecaster Weekly, and we'll have a new issue coming out in the early part of July, and of course, earnings coming out towards the end of that month. I think we have a tremendous amount of value in this portfolio. encourage everybody to hang in there with it. There's been a lot of ups and downs recently, but if you really look at your portfolio and factor out some of these daily ups and downs, I think you'll see that we've been adding value since the March of 2009, when really things bottomed out and began coming on. I think we're going to see a lot more ahead as the economy begins to get back on its feet and strengthen by fits and starts. But again, these things are not rate sensitive by any stretch. They're economically sensitive, and I think that means a lot more upside ahead. Thanks for tuning in. I look forward to chatting with you next time.